Imagine this: Wall Street buzzing with optimism, and right at the same time, fortune multiplying overnight, and everyone believes the party will stay forever. Then, October 1929 hits like a thunderclap where stocks not only fall, they collapsed. What was followed? It was one decade long economic nightmare. Banks scrambling, prices spiraling downward, unemployment soaring, and right at the same time, government only looking for a way to rewrite the rules for capitalism. The late 1920s saw booming industry, easy credit, and same time a roaring stock market. By 1929, the Dow quadrupled just in 5 years, but the crack was forming underneath in the form of rising interest rate, unemployment rising, falling production, and investors struggling with the debts. And then came Black Thursday, October 24, when the rumor of weakening started panic selling. 13 million shares traded on the same day, which made a record at the time. Rightfully, banks tried to calm the market by offering big buying orders. However, the confidence was gone. And then comes Black Tuesday, October 29, where 16 million shares changed hands due to margin calls, forces investors to liquidate the investment at any price. In days, 30 billion was lost, which was greater than US federal budget. This slashed businesses to cut down the wages and jobs. The crisis spread globally when Austria's largest bank, Credit Suisse, collapsed in 1931, which raised panic across Europe. Britain just abandoned the gold, and Germany sank deeper into turmoil. Meanwhile, trade wars erupted as the Smoot-Hawley Tariff 1930 provoked retaliation, causing world trade to be affected by two-thirds. Government clinging to austerity made things worse. By 1933, US experienced unemployment hitting 25% and industrial product falling down by 50%, where despair fueled the extremism worldwide. In terms of impact, US GDP fell by 30% and unemployment fell 25% at the time. Germany joblessness topped with 30%, which paved the way for Nazism. This was the time when everyone was struggling to just put themselves together. And overall, at the global level, the global trade shrank by 66%. After this impact, the recovery was uneven, where many nations revived only by the mobilization of World War II. Economically, bank panics failed the whole economy, where deflation actually raised the real burden of the debt. And right at the same time, what happened that US left gold in 1933 and moved forward. FDIC reserve insurance was introduced, a new deal which actually launched fiscal stimulus. Central banks started realizing how to handle the deflation. Robert Bobson in September 1929 warned that a major crisis is coming, but everyone just laughed before the actual collapse came in just weeks later. When bank fails and nation cling to the gold, the crisis deepen into disaster. The Great Depression taught us that everyone needs to act fast, hold their deposits, work together internationally to stop the spiral.